What's up everybody, I'm Jaspreet Singh, and for a number of years now we've been hearing about this idea of the rich getting richer and the poor getting poorer, but now because of everything that's happened since the 2020 pandemic, this growing divide between the rich and the poor has been put into hyperspeed. And this essentially has been wiping out the middle class, because when you have this type of inflation that we're seeing with gas prices rising, with food prices rising, with housing costs rising, who does it hurt the most? It hurts the middle class and the poor disproportionately more than the rich. Look at it this way. Let's assume that you make $50,000 a year, and now because of the higher gas prices, you're going to pay more money every time you pump your car. Because of the higher grocery costs, you have to pay more money to feed your family. And because of the higher housing costs, you have a higher rent or maybe even a higher mortgage because you have to pay more money to buy your home. And all these things now are costing Americans on average today about $300 a month extra. And so if you're paying an extra $300 a month because of this inflation, well, that's an extra, $3,600 a year, which is just over 7% of your annual income. Now, again, this is just an average. However, if you make $500,000 a year, and now we have this higher inflation, well, guess what? It's going to cost you a little bit more to fill up your gas tank. It's going to cost you a little bit more to feed your family. It's going to cost you a little bit more for your housing. Now, the housing obviously can be a little bit of an outlier, assuming or depending on what type of home that you buy. But in general, your cost of living is going to be almost the same type of increase, because if you're buying groceries, the groceries to feed a family of four is the same to feed a family of four, whether you're rich or whether you're poor. Maybe you're going to Whole Foods instead of, wherever you're going over here, but at the end of the day, the grocery costs are not that much different, because you have to buy groceries here and here. A tank of gas for a rich person costs just as much as a tank of gas for a poor person. So if you see a $300 monthly increase here because of inflation, well, guess what? That's less than 1% of your total income, versus here, you're nearing 10% of your total income. So less than 1% here, more than 7% here. This is where people are turning to the government and saying, you need to do something, help us out, because this inflation is going crazy and we need some relief. And this is where the government is trying to help people. We hope that they don't have any sort of malicious intent. And this is where they'll try to maybe give money to the middle class or the poor. And how do you give money? Well, obviously you can give money in the form of stimulus checks. You can give money in other ways. You can relieve debts, pay off student loans, but all these things again cause more inflation anytime. And it doesn't just have to be student loans. It's the same thing if the government gives money to businesses. Anytime the government spends more money than it brings in, it has to cover that cost. And that money then gets printed through the help of the Federal Reserve Bank. The Fed doesn't have a cash pile just sitting somewhere, so they literally print this money, they give it to the government, now the government spends this money. Now, anytime you print more money, it causes more inflation. So the government can then give more money to these people, but what happens? These people get more cash in their hand, you feel rich for a little while, and then you go and spend this money because you need to go and buy groceries, you need to go and buy a nicer car, you want to go and buy things, you go and spend this money, then this money flows to the top. Because now you've spent this money at Apple, Amazon, at Kroger, at Target. Now these corporations have made bigger profits. They control a bigger share of the monetary supply. And now the cost of living is going to go up even more, while your wages still are not keeping up with inflation. Just based off of this base example, if your income is not growing by 7%, you are effectively becoming poorer each and every year because your salary isn't stretching as far. So now you're either going to have to downsize, or you're going to have to go into debt to continue living life. Now, I do want to say that ultimately the determining factor on whether somebody will become wealthy or not isn't the income that you make. It's what you do with the income that you make. It's the financial education that you have. There was a new study that just came out saying that about a third of Americans who are making over $250,000 a year are still living paycheck to paycheck. It's not how much money you make, it's what you do with the money you make. And this is where now the person that becomes poor or rich isn't just going to be how much money money you make is going to be dependent on the financial education that you have. The key to this sort of financial education is you want to live below your means and then take this buffer that you have and invest this money into assets. You want to own the means of production, you want to own businesses, you want to own stocks, you want to own real estate, you want to own crypto, you want to own some assets that you believe in for the long term, and you want to continue to build up this equity in these assets. So now when inflation happens and your asset value grows, you disproportionately benefit, because at the end of the day, your salary, whether you're on the lower end or the higher end, is not going to be able to keep up with the higher costs. However, your asset values grow with inflation. Now, this is where the psychology of investing becomes so important, because I was just reading an article talking about how people were investing in cryptocurrencies, especially minorities, because now this is their way to build equity into an asset class before the big dogs come in with the big money, so you can build wealth before other people do. This was the whole idea with cryptocurrency, pretty much across the board, not just for minorities, but pretty much across the board, that, you know, cryptocurrency was a way for you to invest in something before everybody else saw it. And now, because we've seen all this volatility and this crash in crypto, some people have been panicking and running away, and they've been saying that they don't believe in it and they don't care about it. But the reality is, this is going to happen across every asset class. You saw the same thing happen with real estate in 2008, where everybody after the 2008 crash said that real estate is a horrible investment. You should never want to own real estate. It is a bad way to invest. Now, most of us can realize in a logical time that real estate has actual value. Now, my goal here is not to tell you that cryptocurrency is good or bad. You got to make that decision for yourself. But what I'm trying to say is you need to have the psychology of investing so you understand. Now, when we go through these sorts of volatile times, when we go through economic uncertainty, when we go through market uncertainty and things go down, you got to be able to understand what's a good investment, what's a bad investment, be able to hold on to the right investments, and be able to buy assets when they're distressed, when they're on discount, because that's where more millionaires are made than any other time. And I do want to mention that if you are interested in investing your money in cryptocurrency, make sure you use a reputable brokerage, because, you know, it is such a volatile asset class. You want to make sure that you're protected by using a good brokerage. And if you're looking for a good brokerage, you can check out our sponsor, FTX US. I like FTX because they make not only buying and selling crypto so easy, but they let you dollar cost average cryptocurrency. So if you want to buy Bitcoin, you enter in the app that you want to buy Bitcoin, and then you can say that you want to buy Bitcoin once, or you want to buy Bitcoin once a month, you want to buy it once a week, you want to buy it once a day. You can pick the frequency, so it's very easy for you to dollar cost average your cryptocurrency, which is what I do. I buy Bitcoin every single day. I buy a little bit every day, and I just kind of ride the market. Whether the market's up or down, it doesn't matter to me. I'm just buying more Bitcoin every single day, along with a couple other coins. If you're already buying cryptocurrency somewhere else, I do recommend you check out FTX, because the fees on FTX are so much lower than pretty much every other major brokerage out there. So you can have more of your money going to buy you crypto instead of just making your brokerage richer. And right now you can trade crypto, you can trade NFTs, and they'll also be launching a feature which will allow you to trade stocks right off of their app. And the best part of all is that if you use my link down in the description below, and then you enter in the referral code minority, you will have the ability to win up to $100 worth of cryptocurrency. And then when you trade $10 worth of crypto, they will also give you a free coin just for doing that. So if you want to learn more and see how you can start investing in crypto with FTX US, I'll put the link to how you can do that down in the description below. Inflation disproportionately affects the financially uneducated and the poor, and anytime you see more inflation, it causes a bigger divide between the rich and the poor, and that's what causes the middle class to essentially be wiped out, because now you're the one that's working to get a paycheck. You're the one that's working to get a salary every single day, and the salary that you're earning is not able to stretch as far. You can't buy as much, and the savings that you've been working so hard to build don't have the same buying power as before. This is why the middle class gets wiped out. However, the people that are financially educated, now this could be whether you're middle class or poor or wealthy, depending on the income that you're making. However, if you're financially educated, you're going to slowly end up more and more on the side of the rich, because now you own the assets which benefit from inflation. This is why it's so important for you to be financially educated, because most of us, I'll diagram this out right here, most of us are only taught to be a worker. All of us, when we go to school, we're told if you get good grades, you get a good degree, you'll be able to get a good job so that you can make a big salary. That's what we're always told. But that's not the only way that you can make money, and that's not how wealthy people make their money. So here is one way that you can make money from your salary. And then the other way that you can make money is from profit or equity. So this is workers. When you work, You're working for a salary, you're working for a paycheck. But every business has two aspects. It has the workers, and then it has the owners. And everybody in America needs to own a business. Now, this doesn't mean that everybody should be starting a business. This doesn't mean that everybody should be operating a business. In fact, the majority of people should not be starting or operating businesses. However, you can still own businesses by deploying your capital, your money, right? Because there's two ways that you can own a company. You can own a company by building it, starting it, or you can own a company by buying it. And the way that you can buy it now is you take the salary that you're earning and you work to own some equity. And the things that you can own equity in are any sort of assets. You can go out and buy actual businesses. You can invest in stocks on the stock market. You can invest in real estate, maybe even cryptocurrency. There's a lot of different ways that you can buy these assets, but this requires you now to think a little bit differently than the majority of people, because for the majority of people, what are they doing? They take their salary and then they have this net zero mindset, where if I have $1,000, I need to spend $1,000, maybe even $1,100 with the help of my credit card and lines of credit. But this is that broke mindset that no matter how much income you're making, it is going to keep you broke. You have to be willing to get out of that mindset. That way now you can have a little bit of a buffer where you have your income, you subtract your expenses, and now you're not just saving your money because your savings are being eaten away by inflation right now, but now you're going to be investing your money. Investing where? Well, investing to build equity. We all hear about equity when we talk about buying a home, because when you pay down your mortgage, you build equity in the home. But there's so many other ways to do that besides just your own home. You can invest in rental properties, you can invest in stocks, you can invest in startups. There's a bunch of apps that let you do that. You can invest in cryptocurrency. So there's a lot of ways for you to invest in this equity, but the whole idea now is you're not just reliant on your salary, because now, going back to the economic side, when we have this type of inflation from money printing, because the government is going to continue spending more money than they bring in, and the Federal Reserve Bank is going to continue printing money. As long as we have this sort of inflation, it disproportionately benefits these people versus your salary. That's why for years now, we've been talking about how the cost of living has been growing significantly higher than wages. What does that mean? Your salary is not keeping up with inflation. This has been going on for decades. Just look back into the 1970s, back when if you wanted to go out and buy a home and buy a car, you could do that with one income, even with just a high school degree. Nowadays, you need two people with college degrees, with student loans to be able to buy a home and get a car. And now sometimes that's not even enough either. So what is that telling us? Inflation is going to be higher than this, the increase of your wages. Now, this is where you have to be financially educated and understand this, and now not just rely on your salary. This is what wealthy people do. The goal is ultimately just to rely here, not here. But you got to work your way there. This is going to take time, it's going to take effort, it's going to take sacrifice. But slowly, you start taking some of your salary and you work to build up this. That way now, you're not just relying on your salary, you're working on the equity side, right? You own stocks, you own real estate, and now these assets can then pay for your lifestyle. And once you do that, now you're financially free, because the income that's coming in from your assets, from your stocks, from your real estate, from whatever it is, can now pay for your expenses. Now you don't have to physically work for the salary to keep funding your lifestyle. Your salary is just there to buy you more assets. That's the way the wealthy people look at it. This earned income is just there to buy you more assets. Your assets are what's paying for your expenses. When you can do that, you have hit that real financial freedom, the real wealth, and this is what financial education is all about. Now, of course, your salary can help, but without the right financial education, it doesn't matter how much money you make, because regardless of how much money you make, you're going to continue living paycheck to paycheck, and you're going to have no money to invest in assets. That's why you have so many people today making 6 figures a year that are still broke, that are still living paycheck to paycheck. The first thing you got to do is understand, how do you do this based off of whatever income you have right now. And once you understand this, the question is, how do you amplify it? How do you do it faster? The way you do that then is by increasing your income. Now, again, this is going to depend on you, your risk tolerance and what you're looking to do. Maybe you get a certificate to get a promotion in your company. Maybe you work harder to get a bonus. Maybe you work harder to get a raise. Maybe you get another job. Maybe you start a side hustle. Maybe you start a business. This is going to depend on you, your risk tolerance, and what it is that you're looking to do. But now you understand the formula that you want to take your salary and work to own equity. This is one of those things that everybody should be taught in middle school, high school, and college, but none of us are taught this because this is really how the system works. Wealthy people are working for this. The majority of people are working for this. And this is why the majority of people are becoming poorer each and every day, because the inflation, while it might slow down, that's the goal, is not going away, and your salary will never, in this economic system, it will never be able to keep up with the growth of inflation. If you enjoyed this video and you want to see some of the biggest lies that were told about money that keep so many of us poor, I made a video covering that, and you can watch it by clicking this button right over there. Thank you for watching, and as always, keep hustling. If you make $1 million as an investor, guess what? You get to keep more than $700,000, between $700,000 and $800,000